A very good afternoon, ladies and gentlemen. A very, very happy Thursday to absolutely everyone. I've decided that we should start actually saying what day it is because I think after working from home for a couple of weeks, we've kind of lost time. But whatever it is, happy Thursday to everyone. Thank you for joining us for ICDM's ongoing webinar series. We have come to the end of yet another week, and I hope that everyone's been enjoying and gaining actually from the sessions so far. Before we actually go into the meat of it, I think it's just pertinent to put some housekeeping rules up. Your mic is automatically muted, but don't worry if you want to actually say something. On the Zoom tab that you see below, you'll see two tabs. One's for Q&A, one is for chat. Any questions you have for our speaker, please put them in the Q&A tab. We'll answer it at the end. And if you're having any technical difficulties, you want to give us feedback, you want to actually, we've been having people giving suggestions even, feel free to drop us in the chat. This whole session is recorded. You will get a copy of it after. And if you wish to leave at any time, you will be able to rejoin if it is still in progress. Allow me to introduce our speaker today, a very familiar face, Eric Vermeulen, ICDM faculty and innovative thinker. Today, he'll be talking about how in times of crisis, stakeholders take center stage. Now, we've talked a lot recently about what the world will look like post-COVID-19 and in fact what a new normal will likely look like. But I think the more important question really is now how businesses and how the boards and how management will evolve under such tremendous pressure. Will you crack or will you evolve? But not only that, it's to ensure that both stakeholders and the businesses actually all survive. And on that, I hand it over to Eric to give his particular insights on it.
Okay, yes, good afternoon, everybody, and welcome. So yes, this is my 6th week working from, I'm in my 6th week now of kind of lockdown. We call it a intelligent lockdown. So I'm working from home. It's kind of self-isolation, social distancing. It's interesting and a weird time, also very difficult. And in this time, of course, it's all about stakeholders. So when you have a company, it's all about the safety of your employees, the safety of the customers. Everybody's talking about that. So yes, I will share my presentation now. Let me do that first. Boom, share. Here we go. So now you see this is the first slide. So yes, in times of crisis, stakeholder takes central stage, and this is very important to all the companies out there. So the first question that we have to ask ourselves is, do we really have a crisis? It feels like that, particularly when you are in your 6th week of kind of self-isolation. But it's interesting to look at the data. So first, what I did is I looked at the global index, the MSCI, which is a global stock market index. It just follows the performance of global equity. And as you can see here on the slide, we had definitely a crisis in 2008, 2009, the global financial crisis. And now we see, yes, everything is going down and a bit up because of the lockdown and the coronavirus crisis. But still, we don't really know whether it is a crisis. I definitely think that we will see a crisis very soon and that we're already in the crisis. But when you look at this data, well, it's not completely clear. But fortunately, 2 days ago, the International Monetary Fund came out with a report, and they actually believe that the great lockdown, as they call it right now, could be worse than the global financial crisis we experienced in 2009. And they actually compare it to the Great Depression of 29. And that will be tough. I found some pictures online where they compare the Great Depression and to what we're experiencing now, and you see similar pictures. So it's definitely scary what's happening. And in a world of, when we have this crisis, of course, we should think about stakeholders, and we always done that. So what we are going to do, we're going to look at what happened in 2009. So in 2009, we had a global financial crisis, and then the same discussion we get. So what should we do as businesses? And most people thought, well, we have to really change the way we think about doing business, and we have to put the stakeholders first. So we should not only think about our investors, we should think about our customers, we should think about our employees. So that's what we see, and then I will show you in 2010, there was this article in The Economist that said, well, we see a new idolatry. So here you see there's a manager or a member of a board of directors, a chairman, which is the cat. And the cat is basically turning to the shareholder and adoring the customers and the employees. And this article said, well, this is US focused, but I live in the Netherlands, I live in Europe, the same thing here. And I know pretty much about Asia as well. We have a similar view. So yes, the shareholders are still important, but maybe we should put customers and employees first. Another thing that happened all around the world is the stewardship code. We all realized that maybe the managers are only thinking short term, and we should basically encourage long-term thinking. So stewardship codes appeared everywhere. We have different codes. We have codes that were implemented by governments. We have private initiatives. And also in Malaysia, you also have a stewardship code, which is, I think, a private initiative, and it appeared in 2014. The same thing happened here in the Netherlands. And we just see them almost everywhere. You see them in Germany. Everywhere you see these codes emerging. And the thing about these codes was not so much to think differently, but to take the long-term view. So we should encourage the investors to also take a long-term view, and then align the interests of the investors with the interests of the other stakeholders, which are the customers and the employees. So this all happened after the great financial, or the financial crisis, the global financial crisis in 2009. And these were great initiatives. But then the question is, are we still thinking that way? Or are we going back to normal and basically put the investors first? So I did some research, and surprisingly, you see that the world was going back to, let's call it, normal. So when I was introduced, we talked about the next normal. And last week I gave this webinar, and also where it was talking about the next new normal. But maybe we have this crisis. Everybody's thinking about, the stakeholders are more important, the safety of the employees, the safety of the customers. But whenever this is over, and it will be over, I hope very soon, we see that things go back to normal. Now, that's what you see on the slides. When you look at the bottom left-hand corner, it's very interesting. It's the CEO to worker compensation ratio. This is US data, and it's enormous, but I can tell you I did some research and looked at what happened in Malaysia. Of course, the numbers are not that big. It's not that CEOs make 278 times more than typical workers, but still they are huge. The same in the Netherlands. But what you see here, that in the US there was a crisis in 2000. This was the internet bubble that burst. And you see that the CEO to worker ratio compensation is going down. Then it's going up again. Then we have the financial crisis. The CEO to worker compensation ratio drops again. Then it's going up again. And now probably it's going down again. And the question then is, will it go up similar to what we have seen with different crises in the future? So maybe we just focus on the stakeholders now, but as soon as the crisis is over, well, things will go back to normal. And then the new normal will basically be the old normal. These enormous differences between CEO management compensation and employee compensation, you see them everywhere. You see them in all industries. And that's what you can see on the right-hand side of the slide. You see them in mining, you see them in manufacturing. So it doesn't really matter what kind of industry you are in. So that made me think. So what's happening today, and are we really thinking stakeholders today? Well, some interesting things are happening. And the first thing that you can see is that a lot of companies and a lot of people out there take advantage of a crisis. And the reason is that we basically created a mechanical financial world. And that's what you see on the slide. It's all about the money. And that was a very interesting observation. how investors were reacting and what was actually happening in stock markets. So when you really take a closer look, you see that there are actually winners in the stock markets these days. And now I talk about the investors. And you can see this on this slide here. So the high frequency traders are winning big thanks to the coronavirus disruption. And why is this? So what you can see here on the right-hand side is the financial company stock market returns for financial companies. So you see JP Morgan, Allianz, Visa, BlackRock, they all go down. But there are some winners here, Virtu and Flow. These are publicly traded high frequency traders. And the high frequency trading are basically computers making all the investments. And these computers are so fast. We talk about milliseconds, microseconds, even nanoseconds now, that it can make decisions. So when the stock market opens and it's open for 2 minutes, they already made like millions of trades, making lots of money. And what's happening right now in this crisis, we see a lot of liquidity. People are buying and selling. There's a lot of uncertainty. It's very volatile. And whenever the stock price goes up and down, these computers can act so fast that they can actually make a lot of money. And what you see on the left-hand side of the slide, you might think, what's this? Well, I now realize that high frequency traders are also located in the Netherlands. Actually, the Netherlands, where I'm from, it's very favorable to these companies for tax reasons. And what you see on the left-hand side was something that appeared in the mainstream media last week. This is the office of a high frequency trader in the Netherlands. And what they did is they put all the employees in self-isolation, but not at home. No, they work from the office because they are very much needed right now because they can make so much money. And they are sleeping and living in tents in the office. And whenever they have to relax, you see that ball there, they can actually play some soccer or whatever they want to do. Now, who are these employees? The employees are very talented mathematicians. And these mathematicians can make algorithms that make these computers faster and faster and actually can make more and more money. That's why they want to keep them in the office. So they are one of the winners. Now, the question then is, what does this have to do with stakeholders? Let me get there. So first, here's what you see, what's happening in the world today. You see several types of investors. You see human beings on the left-hand side, and you see simple computers that can do some simple calculations in the middle, and then the high frequency traders on the right-hand side. And they are faster, more flexible, more independent. And that's what these people, these mathematicians have to do. They have to change the algorithms to make them even more faster, more flexible, more independent. So this computer can trade faster, making more money. Now, the thing with these high frequency traders, it's all normal, it's all legal. And I'm not against it. It's just how the world works. But it also became clear in the media, and there was a lot of discussion, that these high frequency traders don't take stakeholders, other stakeholders into account. It's really all about the money. And now all of a sudden you see news appearing about what they did in the past to become faster and faster. One thing that I found, which was very close to where I live in Belgium, these high frequency traders actually acquired a radio tower, and here you see one for 5 million euros. And the reason why they wanted to have this radio tower is that they figured out that if they use microwaves, what you can also see on the bottom right hand corner, they can actually transfer information much faster between stock exchanges. So these traders are very close to stock exchanges in the UK and in Frankfurt, and they can exchange information so fast, make trades, and make use of the differences that we still see on these stock exchanges. And the thing is that also in the UK, they wanted to put one of these radio towers, but the people who lived there were not really happy, but they didn't care. But fortunately, people who lived there could stop this because they were not really happy with the view. This would kill the view of the fantastic landscape that they had. Now, that's just one example that they just think money. Other stakeholders, well, don't matter that much. Now, what appeared here in the Netherlands was extremely interesting, and this also happened last week, is what they figured out is that these high frequency traders, they attract the most talented mathematicians. And here you see some of them. They work in the Netherlands. And you see the names here, Zikwao, Prasad, Chibolu, Declan Gray, and Jan Zhao. These people are not Dutch, but extremely talented and extremely smart mathematicians. And they always win, and that's what you see on this slide. There's a mathematician or a math contest, and these guys always win. Now the problem, this is not a problem in itself, but what people now are saying in the media is, wait a minute, we need these very smart mathematicians to think about the next normal, to help us go through this crisis. But what they do is they get attracted and probably get a lot of money, which is fine, by these high frequency traders. They don't care too much about the stakeholders. They're only interested in the money. And in a normal world, let's say the pre-coronavirus world, this would have been okay. But now, well, people get kind of fed up with this, and this happens. What you get then is a lot of news about them. And this is from a kind of critical show in the Netherlands that actually say, hey, wait a minute, something is wrong here. We created this mechanical financial world, as I call it, where it's all about the money. And we don't really think stakeholders yet, but we should change that. Now, this is one example of what I still see happening. So stakeholders should take central stage, but maybe don't do it yet. But there's more, much more. So here you see a company called Action, which is a discount retailer. And it was named the best retailer in Europe year after year. And it's backed by private equity. So it's basically owned by private equity. And as you can see on the slide, on the left-hand side, and on 14 November 2019, it was announced that these buyout funds, these private equity funds, they made 31 times their initial investments back from this investment. Now we're under crisis, and you would think that this supermarket would really think customers first, employees, but also other stakeholders, the suppliers, etc. But what did they do? Well, in March 2020, forced also by the private equity funds, they extended the supplier payment terms. And man, this creates huge problems right now with all the suppliers, which are also local suppliers. They don't get the money. Normally would get it after 60 days, which might already be long, but now they extended it to 90 days, which really create huge issues for these people. So the reason, well, if they extend the payment terms, they at least save 336 million euros now. And they say they need this in order to survive. But this is kind of weird when the private equity backer made its investment already 31 times back in 2019. So also here, a lot of media attention, like, whoa, wait a minute. Now we really have to think stakeholders, but many companies still don't do it. Now, more is happening. I can give you so many examples. You see, this was basically from a newspaper in Indonesia, where they say, well, US companies are criticized for cutting jobs rather than investor payouts. This creates problems. And now you see a lot of bailout initiatives done by governments. And there you see private equity funds that don't really need the money now, but also want to get a piece of the pie. And what I try to say on the slide is that all this stuff that's happening, if they don't take the stakeholders seriously, then they get immediately a media spotlight on them. And that's something that I will come back at the end of this presentation, because these are all examples that happen. So we live in this world where it's all about money. Now we say, well, we have a crisis. Stakeholders should take central stage, but is it really necessary to do that? That's, of course, a big question that we have to answer after these examples. Now, what some people say is that what's happening right now is unprecedented, and it's a test for business, for every business, wherever you are. And it's one that you must pass. If you don't pass this test, you will probably be out of business. So the examples that I gave you, like companies that still think, well, it's all about the money, let's get as much money as we can now and forget about stakeholders, there might be an issue. They already get spotlights on them. In the past, nobody would really care about high frequency traders. Yes, in expert journals, but not in mainstream media. But now all of a sudden, whenever you don't take these stakeholders into account, you get a spotlight on you immediately. So it's a test for business, and it's one that they must pass. And now I get to the more positive companies, because there are a lot of companies out there that realize that yes, they have to change the way they do business, and they have to take the stakeholders into account. The first step for most of these companies is that they close stores. You can see this here on the slide. This is just an example from a sports brand, Lululemon, but you will find many of them everywhere in the world. So first thing they do is, well, this is a retailer, well, we are going to close our stores because the safety of our customers comes first. Or they say, well, we management, we earn so much money, we are just going to temporarily waive our right to get our salaries because we don't want to dismiss any of our employees. So these companies really think now all of a sudden, no, it's not all about the money, it's about our stakeholders. We really have to take care of them, and this is also something that big companies have to do. And what you also see is on the left-hand side, is that we are now in this kind of crisis. You see indeed that certain companies say, well, we are not going to pay dividends now, we're not going to do share buybacks, we really have to think stakeholder. And this is just the first that you see. Also the company I work for, Philips Lighting with Signify, we do the same thing. So no, it's stakeholders, it's employees, it's customers, and all our suppliers and society. Now, what you see happening then, and this is of course the more positive news, is that yes, more and more companies are thinking stakeholder capitalism. So they change the way they think from like the normal, it's all about the money capitalism, to more like the stakeholder capitalism. And when they try to do something, they focus on three areas. One is healthcare, that's extremely important. Second one is education. Third one is business, that's the economy. We have to help these businesses survive, the smaller businesses survive, our suppliers survive. And what you then see is that they do certain things with the existing products and services. I will give some examples later. Or they are going to improvise with their products and services and make them available for like the healthcare, education, or other businesses. And you get what I call altruistic products and services. They are not thinking about themselves, but thinking about society first. Now, the guy that you see on the slide, I used him also last week for the people that saw me last week as well. It's Polman. He's the former Unilever CEO, and he is the guy who really takes stakeholders seriously. Already, like in 2010, he was saying, well, I don't work for shareholders only. For me, it's the customers and employees. They are the most important ones. Now, he also says, well, the coronavirus that we see right now is a real test for this stakeholder capitalism. Are companies changing the way they work in order not only so they can survive, but also that they really think about society? Now, let me give you some examples of companies that actually do that with their existing products and services. So what you see here on this slide is on the left-hand side, you see Crocs, shoe company. They give free pairs of their shoes to people that work, they're healthcare professionals, basically. Then you see Starbucks in the middle. They give coffee for free to the frontline responders. Then on the right-hand side, you see Yelp, which is a platform for restaurants and hotels. And they say, well, we help them to give advertisement space and platform space for free. So restaurants can change the way they think from opening a restaurant and having people in the restaurant to delivery services. And at the bottom is the camera that I use right now, which is a Logitech. and the Logitech camera, they give them away for free to educators, so educators can do all kind of online teaching. So here you see a lot of companies that now think stakeholder first by providing their own products and give them away for free or make them available to people that need them most during these difficult times. Then there are other examples of companies that, and I'm waiting, yes, for companies that change, they have different products, but now say, okay, we can also help society, we can help stakeholders by making some changes. One of them is Uniqlo, which is clothing. I love their shirts, very durable. And now they donate 10 million masks. So they start making face masks because there's a shortage of them. Then on the right-hand side, you have a beer brewery from the Netherlands, but they're everywhere. They say, well, instead of making beer and selling them, we are gonna make sanitizers. So the healthcare industry can actually benefit from them. And then you see companies like Tesla, Apple, Ford doing some altruistic ways. They also provide face masks, which is not their product, it's not even an improvised product, but just in order to help society. So you see all these things everywhere. And one thing that you can then ask yourself, what's happening in Malaysia? Well, the same thing is happening in Malaysia. So what you see in Malaysia, several companies here, there are many more, but these are just ones that I could find really quickly. You see Aya Cares Insurance giving financial support to the frontline responders. You see Supermax Corporations, a corporation which makes latex gloves, giving these gloves away for free to first line responders. You see Yuda Holdings, which is real estate development, let's call it like that, giving all kind of electronics away for free to hospitals. And I also see the Philips television, which is kind of a coincidence. And on the right-hand side, you see Tony Fernandez. You'll know him with Air Asia, doing similar things, foregoing the salary, explaining to the stakeholders what they are doing in order to help them. So here you see a lot of things that actually say, well, it's not all about the money. We have to help society go through the crisis. So this is not only the responsibility of governments, it's also business responsibility to help them. And we should be all in this together idea. So then you might conclude that, yes, many companies are passing the test. Many companies take stakeholders very seriously these days, and they start changing their behavior. It's not all about the shareholders. It's also about the customers. It's also about the employees and other people in society. But then the big question is, what will happen as soon as we out of this crisis? Are we still thinking environment? Are we still thinking society? Are we really going to change the way we think? Or will we go back to it's all about the money attitude really quickly? And this is the question that we should all ask ourselves. Because if we start thinking, as was mentioned in the introduction, if we have to think about a next new normal, then what is the role of the stakeholders next new normal? And if the stakeholder becomes more powerful, then businesses should continue to change, take the stakeholders seriously in order to remain relevant. So this is a question that we have to ask ourselves, and I'm going to do this right now in the last 10 minutes of this presentation. Now, a lot of people are thinking about this. I'm not the only person. And some very smart people that I know come up with some very smart things. So here on the right-hand side, you see a paper which was done by Harvard. And what they basically say is, well, stakeholder governance, stakeholder capitalism, it's not going to happen. It's not going to work. And they refer to something that happened in the United States in, I think, this summer 2019. And you see it on the left-hand side. A lot of big companies said, well, we have to change the way we're going to work in the digital age. So this has nothing to do with the coronavirus, because back then we didn't have this crisis yet. But they said, well, it's not all about profits. It's also about purpose. You see new generations. You see the millennials. They think differently. They also want to have a purpose in their life. They want to give back to society. They take the environment very seriously. So we, big companies, if we want to remain relevant and attractive to other stakeholders, we should move away from just thinking shareholders to really embracing stakeholder capitalism. Now, on the right-hand side, this is a paper that appeared like 2 or 3 weeks ago, where they looked at how some of these companies behave. And what this paper found out is that most of the CEOs, if you look at their compensation, it's all performance based compensation. But when you look at performance, it's all about cash, it's all about profits, it's all about the money. Only a few, and they are highlighted here in orange, had in their compensation had in their statements that the compensation also depended on some stakeholder capitalism mechanisms like customer satisfaction, employee satisfaction. But that was only a minor, very small part of their compensation. So they argue like, well, probably after the crisis, we just go back to normal. And I don't agree with this at all. I think stakeholders should take central stage. I already thought this before the crisis we have right now. And when I look at the company I work for, the way we innovate, the way we work, I really think that it's the end of the corporate world in which we only think about the money. It's definitely more stakeholder oriented. If you are not stakeholder oriented, you will simply not survive. What's happening right now with the crisis that we accelerate future, we reset business, and we have to unlearn what you have learned so far about doing business. And I have a very strong opinion about this. But still, I have these people from Harvard and other schools telling me something different. So what I did is I said, well, I also need some data. So what I looked at the top 10 performing stocks of the 2010, so the last decade. And this is interesting because it's all about the money, you can say. But these were the companies that you can see on the left-hand side: Netflix, Domino's Pizza, Market Access, Exact Sciences, Dexcom, Cheniere Energy, TransDigm Group, Broadcom, Fair Isaac, and United Rentals. These are the companies that you could invest in. If you invested in these companies in 2010, you would have made a lot of money. If you look at the last column here, that says if you invested $1,000 in Netflix in 2019, the end of 2019, these $1,000 would have become $41,110. And you see that whole list. If you compare that to the S&P 500, if you invested $1,000 in 2010, that would have been $3,570 in 2019. But these companies really outperform the others. What's so fantastic about this list is that Netflix, we probably all know, Domino's Pizza, yes. All the others, to be honest, I never heard of them. And they work in the finance industry, healthcare industry, but also just the engineering, traditional industries. And you see one of these companies is highlighted in red. The reason is the following. I just looked at these companies, and this was just the top 10 performing stocks. List was published by the Motley Fool. And when I was looking at these companies, it took me less than 1 minute to figure out that all these companies take stakeholders extremely seriously. Just go online, you go to the investor relations websites, you go to the corporate websites, and you immediately see, yeah, this company learned in 10 years, really moved from only thinking about the money to also thinking about stakeholders. But by doing that, these companies became extremely valuable and they worked extremely well. There was only one company, and that's the one highlighted in red, that didn't really do it. And this company is working in aerospace parts. So that shows that certain industries also grow extremely fast. But just go quickly through this whole list. And what you see, if we start with Netflix, you see this on the right-hand side. You see on the investor relations website of Netflix, one long-term view. There's something about the Netflix culture. Books were written about the Netflix culture, which is all about how to attract talent, how to give them freedom and responsibility. If you look at the Netflix approach to corporate governance, completely different to other approaches to corporate governance. It's really about telling a story. It's really about engagement. And also the ESG report, environment, social governance, was there already at a very early stage, and they take it very seriously. So that's just number one. Now, if we go to the second one, just quickly here, we go to Domino's. And Domino's, it takes you 30 seconds. You go to the website and see that it's all about community. Community thinking, embracing community, really thinking about what the stakeholders need in order to remain relevant. They have enormous number of competitors, but they outperform them because they really take the customer first. The opening hours, the way they deliver, the service they give, everything is focused on stakeholders first. Then we have this other company which is called Market Access, and Market Access is a fintech company. And as you can see here, the guy is playing golf in the office. But as soon as you go to the website, you see it's all about the culture. So the employees can learn, the employees can identify themselves with the company they work for, and the employees also take part in the decision making. Then when we look at the Exact Sciences, it's a healthcare company. It's a cancer detection and treatment products that they have. Well, this is very clear that they have to take stakeholders first. The same for the next company, which is Dexcom, which is a diabetes company. And what they put on the slide on their website is listen, serve with integrity, think big, be dependable. But whatever you see about this company is actually that they live these statements. So they really think stakeholder first. Next stop, we're almost there, is an energy company. And an energy company, well, I was really interested because normally energy companies and stakeholders and environment and society is rather complicated. But what they have on their website, you find it instantly, is a grievance mechanism. So they invite people that have complaints, and there are a lot of people with concerns and complaints, but they put it online. They say how they dealt with them in order to show that they are taking stakeholders extremely seriously. And then when you look at the next company, which is Broadcom, which is a technology, connectivity and cloud company, and semiconductors. When you go to their slide or their website, you immediately see corporate culture. You see employee training and development, supporting communities. And again, I did some further research. This is not just empty talk and window dressing on a website. Two companies left. One is another finance company. They really go far. They have a products ideas portal that you can find. When you have an idea, you can just submit the idea to them, and then with them you can develop and co-create the next solutions that can also help you. So they take stakeholder engagement extremely far by inviting stakeholders to co-create with them. Now, the last one is probably the best example that you can see these days. This is United Rentals. It's an equipment rental company. Nothing new, no platform, no digital company, no Amazon, no Google, simply equipment rental. And what you see here, they were founded in 97. And what they did on this is on their investor relations website. So they said, well, we have certain periods, 97, 2008, 2009, 2013, and 2014 to present. And when you just look at this, you see how the world changed. So in 97 to 2008, it was all about making the company big, creating a company, that's it. In 2013, it was about products and putting the product out there. But if you look now, 2014 to present, they really changed, embracing digital, looking at what customers want, trying to figure out a better experience for customers. So you see here on this slide how they moved from just the old, let's say, traditional corporate world to a more stakeholder capitalism approach within their company. So yes, the winners of the last decade already embraced the stakeholders. What we see right now during the crisis is that this way of thinking is accelerating. Now, every company has to think this way, otherwise they might not be able to survive. So what we then see, and I am very close to the end right now, is that the quote from Satya Nadella makes a lot of sense. He says, well, today we live in a multi-constituent world, and the role of the CEO and the company is to keep all of the stakeholders in balance. It's about the customers, employees, partners, shareholders. It's all about all of them all the time simultaneously. And I think this is exactly right. It's the only way for companies to survive, but also to help society during these difficult times. Now, when you look at the 10 companies that I quickly ran through, you see that in their stakeholder approach, there are 5 components extremely important. 1, it's culture. 2, community. 3, collaboration. 4, co-creation. 5, communication. These are the 5 C's that every company should really look at. So when you are the board of directors, where you are management, go back to your company, really look at these 5 C's, how you do them, how you deal with them, but also how you communicate them to the market and how you transform your company from what kind of a hierarchical pyramid that you see on the left-hand side to more like an ecosystem approach that you see on the right-hand side. And if you don't take these 5 C's seriously, let's go back to what I said at the beginning, well, a spotlight will be put on you very, very fast. So yes, you need to embrace stakeholder capitalism in order to survive. If you don't do it, your reputation will get hurt, because there will be a spotlight immediately on you, similar to what we have seen with your high frequency traders and private equity funds and other investors that don't take stakeholders seriously these days. Now, I could stop here, but I have 2 more slides, because maybe some people are still not convinced about stakeholder capitalism. And I work at Philips Lighting, I mentioned that, and I work at Philips already for more than 20 years. And here you see Philips, which is a very old company, and they innovate already for 128 years. This is from their investor relations website. So many of you know Philips radios. You see them they had the radio in 1927, the first Philips radio. They had the electric shaver in 39, microscope 47, TV in the 50s. And then you go down to the bottom. You see now it's all about ultrasound, next generation image guided therapy platform, Philips IntelliSpace portal, Philips IntelliSight pathology solution. Now, what's the difference between all these innovations? In the beginning, in 1905, 1924, 1927, it was all within Philips. It was within this hierarchical structure, within this company that they innovated. Everything was done inside. When you look at the innovations these days, nothing is being done inside anymore. And what they say right now about the innovations, well, it's all very unique. They have a very unique approach to customer engagement, because they understand that if they want to innovate, if they want to remain relevant, and Philips is doing a lot, particularly here in healthcare, to help us get through the crisis, you see that when they innovate, they really take stakeholders extremely seriously. It's understanding the entire experience, is giving stakeholders voice, leveraging the power of data, co-creating the solutions together, and implementing and transforming. That's the way companies innovate these days. That's the way companies remain. So yes, if you want to help society go through the crisis as a business, if you want to remain relevant, it's definitely what's happening now. It's goodbye corporate world. It's goodbye the old world of it's only about the money, and hello a more human world where stakeholder capitalism, as some people call it, or stakeholder engagement becomes extremely important. That's the only way for your company to survive. And if you want to check your company, just think the 5 C's. Thank you very much for your attention. And now it's back to the moderator and the questions. Thank you.
Thank you very much, Eric. I always enjoy your presentations more, I have to say, and today is actually kind of no exception. We've got a whole bunch of questions for you, but before we actually go on to that, I want to ask, I suppose my own question is, how does one make that kind of balance between this kind of company type altruism and business? I will be the first to admit I can be a little bit more cynical when I see companies try and do good things. You raise a question mark, but what can companies kind of do to show that it's just not lip service, that they do actually care?
No, this is an extremely good question. That's why I raised it. So you see a lot of companies these days trying to give back. There are many examples like Uber, Facebook. They all donate lots of money, and a lot of people say the same thing as you say. Well, it's all window dressing. As soon as we go back to normal, these guys will take advantage of us and the privacy and all that stuff. And also many of my colleagues say the same thing. It's all about the money eventually, and they don't take care too much. But that's why I looked at these, and I was very happy. And I just did it randomly. So I looked at, okay, let's look at the financial. Which companies could you have invested in best last decade? And this was random, and I did it like 3 days ago. I looked at the list and then looked at the companies, and I checked them, and within 1 minute, I could see that this was actually for real. Now, my dog, again, as last week, agrees immediately with me. It's amazing, right? It's like I've trained her. But
exactly.
But what I can see is, yeah, you have to do some more research in order to see whether this is window dressing or not. I agree with you that there are definitely companies out there where you cannot take this seriously, and probably they will go back to normal. Their normal as soon as this is over. But the best companies, the best performing companies, the companies that really matter now and in the future are the ones that take stakeholders seriously. Otherwise, they can simply not survive. You have to innovate together. You have to co-create. That's one. The other thing is that, and that goes back to really to your question, is companies that do window dressing and don't take it seriously, they get the spotlight on them immediately. And in this world of social media, you might not like social media, but the good thing about it is that it gets out there instantly, and it will hurt them. It will hurt them badly. And there are many examples of that, companies that didn't take it seriously and they got hurt. So one, the main reason is companies have to embrace, let's say, a stakeholder approach in order to survive. Secondly, if you don't do it, a spotlight will be on you relatively quickly, and that will hurt you and hurt your reputation.
Moving on to the question, Francis here asked this question, and it's very pertinent. There is always this tug of war, right, between stakeholders, investors, management, employees, suppliers, customers, anybody who has a say in all of it. How is the best actually to bring some form of alignment into these diverse groups? Basically telling them, look, it's aside from personal survival, we are all in this together.
Again, I think the question is very good, extremely relevant, and this is the point that many of my colleagues, also the article that I referred to from Harvard, and some others, they say, well, when you are a company, you simply cannot focus on all the stakeholders at the same time. It will be confusing, so you have to focus on one. Americans will say, well, you have to focus on the shareholders, because if the shareholders are happy, you make a lot of money, and probably the other stakeholders are happy as well, because otherwise you will not make a lot of money. That's their view. I kind of agree more with Satya Nadella, the CEO of Microsoft, who says, well, the world changed. You have to take all of them seriously, and it's about all of them all the time simultaneously, and that's extremely difficult. But I think the board of directors, management, they cannot, and we talked about that last week, is the new leadership style. And you had some other webinars on leadership. And I think leadership is extremely, extremely important, because if you manage your company like the traditional old-fashioned way with command and control, it's not going to work. Then you cannot focus on all of them at the same time. But if you manage your company more context-driven, more like an open leadership style, where you say, well, my company has more people work there and they all have to work together, then you become basically the real director of the company. You give them directions, as we talked about last week. Then I think you can show as a company that you are helping society. You can show them that we all in this together, and it will actually benefit you as a company. That's the weird thing. So it will benefit investors, because if you look at these companies, if you invested $1,000 in them, you would have made so much. And the reason is that they embrace other stakeholders because they can move much faster in what society actually wants. So yes, it is possible to think about them all the time and to manage that. But it's the way you operate your company. It's all about the leadership that we discussed last week. But think about the 5 C's: the culture, the community sense, collaboration, the co-creation, and particularly the communication. I think communication is the most important thing here. How do you communicate? How can you tell your story to the market? That's how the market can actually check whether you are right. But you can also make mistakes. When you make a mistake, you admit it and you continue. That's the best way. You become an open company these days. It's difficult, but I think that's the best way to survive. There are too many examples of companies that try to hide things or try to fool the market. And I think 10, 20 years ago, you could have gotten away with it. But if you look at certain car companies that were using software to fool the market, you cannot hide it anymore. And you cannot play the game like, oh, I didn't know it happened somewhere in my organization. It's not good. There will be a spotlight on you.
All right. Jiali Lu, who's an ICDM affiliate member, actually asked this, talking about your 5 C's, right? And how to use them as principles. But given the current situation where it's even harder to, where change is being forced on you, right? COVID-19 is forcing you to do changes. How is it that companies can act sort of prudently and realistically towards stakeholders, but at the same time make sure that the company's interests are protected, that the company itself will not collapse? It's like, how again, it's all about balance. How do you find this balance, especially in a time as trying as this? Should be the first thing you should be thinking about.
Yeah, this is a very difficult question. The question is very good, but it's also difficult because many things are going on here. So yes, you have to protect your company. And right now we have a crisis and a lot of things are happening. Companies are giving things away for free in order to help society. They cannot continue to do this. But I think it's more, and this goes back to your question as well. So companies that are just doing something and donate things and think charity, and try to use this charity as a kind of, okay, we donate to society, we give things away for free. So yes, we embrace stakeholder capitalism. You should not confuse the two. That's not stakeholder engagement. That's just donating. That's charity. That's not stakeholder. And I think right now, the companies that really understand what's going on, they also have to accelerate and learn to learn, and see that we have to change the way we do business. Yes, we have to give to society, but we should also engage with society so we understand what society actually needs. Give you one example, which is a very difficult example. It's the airlines. So one thing airlines can do is they can say, well, we give some money because nobody is flying now. We go through difficult times, but then they can bet that like after this crisis, everybody will go on the plane again and we start flying again like crazy. That's a big if. If you look at certain models, some models say that, well, it will take up to 2025 before we actually go back to the traveling we did in 2019. I don't know. These are mathematical models done by very smart people. But if this is the case, then I think you should also use this engagement that you have with the stakeholder to figure out new businesses, new business models, new products, new services that society wants. So maybe airlines are not only going to fly people, maybe they offer different services with air miles. There are already examples of that, where air miles became a kind of payment to get insurance, to do all kind of other things. Maybe airlines will go into virtual reality. I don't know. I'm not a CEO of an airline, but I would definitely not think that the world go back to 2019 very soon. So I have to think broad. But me, I'm an airline guy. So in order to figure out what the market wants, I engage with the market because I have to do that anyways, but also listen to them. So it's not a one-way street. It's not that I give to society in order to help them get through the crisis. No, I also try to learn and create a dialogue with society so I can actually figure out what a good business model could be in the future. That's stakeholder engagement. So it's all about communication. If you look at these C's, I think the communication C is the most important one.
Talking about communication, not just to your stakeholders, several questions here from like Jennifer Tien and a couple of other our attendees have actually asked this question of to where to start. And I think I've asked this to you before as well, right? People are so stuck in the way that they're thinking, especially boards in particular. How do you get it through to them that this has to change? You know, I mean, I think that's the main thing. How do you get it through to them that this isn't just a blip and this is the way it has to go forward?
Yeah, this is okay. There are like several
we can't have your dog.
No, I know there's several answers to this question. So if you just look at the crisis, I think what most companies did, they came out with statements, letters, namely by CEOs. As I mentioned last week, a lot of videos out there by CEOs to the market saying that the world is changing and what they are going to do. I think that's all good to do that. But what I also see is that many companies say, well, people are working from home. There's not so much work right now. I think that's where they are mistaken. I think they need the time now also to rethink what they are doing. So certain companies set up special teams to help the company figure out where the world is going. And I think that's one thing that they need to do. As for the directors and the managers, I think you should really analyze your company. Really, and this is what I said last week, you have to be really honest about your company. You have to be honest about how you made money in the past, how you make money now, and how you are going to make money in the future. I think that's extremely important. When I say it's all about the money is bad, that's true, but money is still important. It's a fuel that you need to run your company. And I think you as a board of directors, as a manager, you really, you are obliged to think about the future and not just wait till this is over. You also need a time to rethink. And this can be done through many things. Is this kind of webinars, is training, having sessions with your managers and really, okay, let's analyze. Let's look at the winners of the past, how they do it. Learn from each other. I think that's the way to do it. And many companies are actually doing this. They create all these platforms internally so people can share ideas more easily. People can enter into a dialogue themselves. Listening is probably the most important thing of the whole communication. It's not only putting things out there, it's also listening to the market, listening to your stakeholders in order to help them and in order to survive yourself.
Okay. Then there's this question here from Grace Yap, who's asking something interesting about how taking all stakeholders' consideration actually costs money. It is apparently a chicken and egg situation. spend money to make money, right? It's good to accept it in theory, but she wonders, aside from the examples you've given, are they rare occurrences? Are those companies who have done it well, are they the exception rather than the rule? Is it just still a pipe dream to be able to kind of balance all of this? What are the practical steps really to achieving this kind of ideal?
Yeah, this is also, yeah, all these questions are really, really good. And I definitely need more time to go through them. But not, yes, I think right now that the examples, the really the companies that embraced it, they are the exception probably right now. But you see more and more companies realizing that this is the way to go. As for the cost, I don't think it's a chicken and the egg problem. I think right now you have to reinvent yourself. Everything, you have to analyze what you're doing, reinvent what you are doing. But that has nothing to do with the crisis. That's what I tried to show. We had a digital disruption already. The digital transformation was already there. So a lot of companies, retailers, banks, let's say all traditional industrial companies, they had to reinvent themselves already. I work at Philips Lighting. We were a light bulb company. No way that we could survive as a light bulb company. So we are transforming to an IoT, an Internet of Things company, where data and platforms become more important. If you look at that slide, what Philips was doing with the innovations, that's why I mentioned them in the beginning. You saw that the innovations were product innovations. Now the innovations are platform innovations. So you see also the companies transforming. So every company had to transform already, and they had to become a tech company where data became more important, and they had to become a media company where dialogue, social media, understanding millennials and Gen Z became more important anyways. Now, this was a struggle that all the companies had, and we gave a lot of trainings at ICDM because ICDM understood that the market was changing. Now we have the coronavirus crisis. The only thing that the coronavirus crisis is doing for business is accelerating the transformation. So the transformation had to happen anyways. Now it's accelerating. And yes, the cost, yes and no. There's some companies make it very costly. They go to the best consultants out there, the McKinseys, and yes, you pay a lot of money. But I don't think that's necessary. Having training, thinking about this, creating a team inside, let's call it a first responders team within your organization to figure out what's happening there, it's not that costly. Starting up communication with the market, it's not that costly. Listening to your stakeholders, it's not costly. Seeing how boundaries within your company are disappearing, it's not that costly. So don't treat the marketing department as marketing, sales as sales, legal as legal. You have to create bridges there very quickly, because then they can operate and react and act much, much faster. So yes, you have to go through some transformations, but I think you had to go through them as a company anyways. Right now, everything is being accelerated, and yes, there's a reset. And I can give you an example that's very close to my heart. My wife has a restaurant, and on Sunday, I don't know the exact date, at 5:30, the government announced that at 6 p.m., 30 minutes later, the restaurants had to be closed. Now we can sit there and relax, but we have to reinvent ourselves. Now I can tell you that I have discussions with my wife, and this is just a restaurant, but it's the same discussion. We already know that we will never, ever go back to what it was before that Sunday. We will not go back. We will be different. We already have delivery service. We never go away with them. We never get rid of them anymore. We keep doing them. The way we communicate with the stakeholders, let's say the guests, completely different. We will keep this. We will reset our business, and we have to do it. Otherwise, we will probably have a lot of problems in the future.
Yeah, I think that's the main takeaway that all of us have. I mean, there's this urge, I think, to go back to where it was, but I honestly think there's no more where it was at this moment.
It will be hybrid. It will be hybrid. So if you look at ICDM, I think you have a lot of trainings, but you will probably continue doing things online as well. It's not that you will get rid of them as soon as the crisis is over. No, because this worked. And let's be honest, with my teaching, the same thing. I will keep doing certain things that I do right now. It's getting so close. So yesterday I talked to somebody who was attending meetings in Japan all the time. And now these meetings were on Zoom. And he said, well, I've never felt so intimate in these meetings. Normally I was sitting there and doing some other things, but now people are in your face, you know, everybody had the camera on. It's a completely different experience that we have to go through. And every company has to do that. And I think that's one of the tasks that board of directors and managers should have. They should have this discussion. And if they haven't had it, they should definitely start having it very fast.
Right. And I completely agree with that. But with that, we've come to the end of our webinar. Thank you so much, Eric, as always. I always find your presentations extremely entertaining and informational as well. But with that, we've actually come to the end of our webinar for today. Thank you to everybody for the flood of questions. We really do apologize that we're not able to accommodate everyone, but seriously, just keep them coming in. It's so much appreciated. And of course, go through the chat box. We have a number of interesting discussions and tips also taking place there too. As always, we'd love to hear from you. Please use the survey link in the chat box or the QR code that we've presented to provide your feedback and topics of interest. There's an online program series. Interestingly, Eric mentions that we will probably still go online, so please watch this space. If you want to know beforehand, development@icdm.com.my is the email, icdm.com.my is the website. That is it for this entire week, but ICDM's webinar series will actually continue on Monday with Azman Osmanrani, who is the CEO of Naluri Malaysia. See you at the next webinar. Be safe. Have a good weekend, everyone. Protect yourselves.